Markets rebounding today, as you can see, following their second worst weekly performance this year. The weak import numbers out of China, and then, of course, uncertainty surrounding when and if the Fed will raise rates in just 9 days, leaves this question: should investors expect more volatility this fall, and how can they prepare their investments to withstand that? Joining me now in a Fox Business Exclusive is a guy who knows. He's former UBS Chairman and now Route 9B Technologies Chairman and CEO, Joe Grano. Joe, first off, you and I were listening to Buffett here,
yes,
just as he spoke, and he's very honest about the fact, I'm going to borrow $10 billion right now to pay for precision cast parts because borrowing money is so cheap.
That's correct.
The rich get richer, right?
Well, that's what's happened. Anyone who has long assets, when you have zero interest rates, the present value goes through the moon. So if you're long equities or if you've been long real estate, such as commercial real estate, done very well. And so the wealth gap is real, all because of zero interest rates.
The Fed.
The Fed, yes.
If you were running the Fed, I'll ask the same question I asked Buffett. Would you tighten rates this coming September 17th?
I think between now and the end of the year they will. But I also believe that they're getting pressure not to from IMF, from the EU. And you've had this contagion problem with literally a collapse of currency values in the emerging markets. So a stronger dollar only exacerbates that. So I think that they may be a little bit more cautious.
People say if they tighten rates now, they could derail the very tentative recovery that we've fought so hard for. Do you think that would happen if they did?
No. I think 25 basis points is already in the market, and it's insignificant and inconsequential.
Well, the dollar's strong. We can see that right now. It takes $1.12 to buy a euro. Just a few weeks ago, it was $1.14. Looking ahead at the rest of 2015, let's start with September, which is traditionally the worst month for stocks. Should people get out, keep their powder dry, and then wait till things calm down, or is that trying to time the market too much?
Well, I don't think volatility is going to go away. I think part of our problem is that the market's been so fragmented that price discovery is problematic, institutional buying, high-frequency trading. So the quality of markets, I think, have suffered in the last several years. So volatility is with us to stay. I think that we could see the correction going a little bit further, perhaps another 10%. But I also believe in the land of the blind, the one-eyed man is king, and that's the United States. So I think although it's kind of an anemic recovery, I think it's real, slow but sure. And I think that what you should do is leg in with stocks that you really like, slowly but surely. Don't jump all in with 2 feet.
Dollar cost average, perhaps?
Dollar cost, that's exactly what you should be doing.
Okay, if you were running UBS today and you stormed down to the trading floor and all your brokers were hanging on your every word, what would you say? Buy great companies, get out of treasuries, it's not paying enough? Are you worried about a high-yield bond bubble?
Well, if I was telling them the truth, which I would do, I believe in a barbell right now, 70-30. 70% of your assets should be quite cautious and careful, a lot of liquidity, cash equivalents, very high quality stocks with good dividends if they're there. There are a couple of sectors that I like in here. At the other end of the barbell, very aggressive, biotech, private equity, nothing in the middle. There's no reason to be in the middle. So that's what I would say. And if I'm wrong, I'm going to do very well at this end. If
Which
I'm right,
sectors?
I got.
Just said sectors.
I like the financials because as interest rates go up, the spreads will increase, and the overhang of regulatory onus, the $1 billion fines are starting to go away. I think that's going to help them in terms of their legal reserves. And I also like the tech stocks, like chip makers in particular. I like.
If a grandchild of yours came up and said, "Grandpa, you used to know what you were doing in this industry," what would you tell them to buy with their little bit of money that they had?
Probably, well, at their age, I'd tell them to buy a biotech stock.
Okay,
because
really?
they're young enough to recover.
Do you hear that, folks? Biotech. It's great to see you, Joe. Thank
pleasure.
you.
Thank
the
you.
Voice of reason, the barbell approach, 70-30, 30% really aggressive.
Yes.
I like that. Thanks so much.
You're so welcome.
Good to see you. Joe Grano ran UBS, and now he's with Route 9B Technologies.